It's time for Stock Picks. Today we're diving into the retail sector, the food services industry and the aerospace realm with Mr. Price, Bidcorp and Boeing. Gary Booysen from Rand Swiss joins us with his analysis of these counters. Gary, again, thanks so much for your time this afternoon. And let's start off with Mr. Price, a really interesting business, one that seems to be getting it right on all fronts. I mean, you look at fashion trends and they're kind of getting it right in terms of the price point, also getting it right. And you look at how diversified it is within that retail sector, from sportswear to homeware, even in the beauty side of things. Just take me through your analysis of that counter and why it's your stock pick today.
Yeah, so Mr. Price, it's a fashion value retailer. So, typically it's not looking at the very low end market, although it does obviously service that market as well. And as you said, I mean, it's been a fantastic growth story for the business over the last little bit. Last year, I think it was the third quarter, they passed 3,000 retail stores. So there's definitely a growth case there. And you said they're firing on all cylinders. It's difficult to see where they're failing. The only place they're failing this year is in their share price performance. So share price is down around 23% for the year so far. And if you look in terms of actual underlying earnings, it doesn't quite justify it. So it's currently trading on a multiple of about 17, which some people would say is expensive, but for a retailer like Mr. Price, historically speaking, is actually not expensive at all. If you look at it, you probably hear it on this channel more than anywhere else. Many analysts will say the consumer is under pressure.
Yeah.
But the fact is that the consumer in South Africa is actually under less pressure than they have been for a fairly long time. If we look at latest data, I think it was from F&B Bureau of Economic Research data. What's happening in South Africa is we're actually seeing real wage growth. So what you're seeing is the inflation-adjusted wages are increasing. Now, one of the reasons for that is you've seen a lot of government sector employees, a lot of the big mining companies are in probably year 2 or 3 of, let's say, 5-year wage agreements that have pegged wages at around 6%, at 6% increases at least. Meanwhile, if you look at our inflation number currently, we're only sitting at about 3.2%. So you are actually seeing real wage growth. And as I said, we're kind of hitting 3-year highs on this in terms of take-home pay. Now, part of that should feed directly into our retail sector. So the idea that Mr. Price is selling off in an environment like this, also an environment where some of the input costs are more subdued. We've had, while load shedding has kind of reared its head and disappeared and reared its head and disappeared, it is far more subdued than what these retail businesses have been operating under for a long time. That's also going to help. I mean, we've got a little bit of a tailwind from the two-pot changes as well, although that is expected to drop off. But altogether, it actually makes a fairly positive picture for South African consumer-facing and consumer discretionary stocks like Mr. Price. At the same time, we've got to be cognizant that we are in a higher interest rate environment. We've got some movement down in interest rates, but at the same time, Mr. Price primarily is a cash retailer. They've seen big growth in their credit sales as well, but they're very careful about how they extend credit to their consumers, which I think also just adds a slightly more defensive quality to the business.
And you mentioned households in a better position, but then I want to bring to you the case of, the VAT hike that possibly could be coming through and how that could then weigh on retailers. I mean, the first time we heard of the announcement when the budget was postponed, when Minister Korongwana had said that we could possibly get a 2 percentage point hike in the VAT, retailers were really under pressure.
No, absolutely. And I don't think that because the uncertainty remains in the market at the moment, I don't think that's been reversed. We're now talking about a 0.5% VAT increase or no VAT increase at all. And, if you look at the underlying market pricing, as you said, from that announcement, we've seen a big sell-off in retail share prices. It did start a little bit before. And I mean, remember, these are very foreign-held companies as well. So they are exposed to portfolio flows. And if foreigners just decide that we want to pull out of an emerging market like South Africa, you do tend to see money flowing out of the counter. So I wouldn't attribute the share price weakness specifically to a VAT hike, VAT hike, for example. But at the same time, we've seen no indication that as the discussions have progressed within the GNU, that the view has been expressed through share prices like Mr. Price. We've definitely seen it in the currency. We saw, as we heard that, talks have fallen apart on Friday, we immediately saw a 20-cent spike in the rand dollar exchange rate, but you didn't didn't see the same kind of movements in the underlying stock price of a Mr. Price. So I would argue that the VAT hike is at this stage, going to be far lower than that 2% level, if any VAT hike. I suppose we're going to wait and see and find out. But at this stage, at this stage, it will impact obviously consumers, but I think it's one negative factor in a whole swath of positive factors that for me make the share price look a little bit cheap.
All right, let's move over to your second pick, a really defensive player on the JSE, Bidcorp. While it's still delivering upbeat numbers, just reflecting on the recent earnings report, we are seeing somewhat of a slowdown in profit growth, a slowdown in revenue growth. Would you say that this is maybe a normalization following the pent-up demand we saw post-COVID?
Possibly, yeah, and I think again we've got to also as a food services business, they feed into restaurants, people going out and eating, really across the globe.
Yeah.
So this is not while you say it's a JSE, it's JSE listed, but probably 90% of Bidcorp's earnings come from offshore as well. A large component of that comes from European markets as well. Now we understand that even post COVID, the world is a messy place at the moment. People are afraid they're potentially, spending a little bit less. If I look at 2024 revenue numbers on Bidcorp, for example, around a third of their revenue comes from Europe. Another probably 28% is coming from the United Kingdom, so very European focused. But what you are seeing at the moment, if we just take a step back from the underlying operating metrics of the company, is that we've seen a resurgence in European stocks. And part of this has nothing to do with the underlying operations of the businesses, but instead it has far more to do with the perception that European stocks are going to be more appealing. It's one of the reasons for the first time in a long time we're starting to see European counters, and yes, this is a JSE listed counter, but we're seeing European exposed businesses actually performing better than S&P 500 exposed businesses. For people looking for a solid rand hedge, I mean, we were talking about the GNU earlier. If there is, let's say that the GNU was to collapse and suddenly we were to see the currency going back to 1950, this is the kind of counter that's going to protect you against that. So it's got that strong rand hedge component for investors, and at the same time, while it's not really a story, it's a difficult stock to tell an exciting story about.
Yeah.
And as you say, the revenue line increases. It's steady. It's not shooting the lights out. It's not developing a new product that's suddenly going to assist its earnings in doing 30-40% a year. This is a steady compounding type story that remember Bidcorp came out of the Bidvest stable, so it's a very well managed, decentralized business that kind of does its regular increases and is actually quite defensive if you look at its track record over the last, let's say, 30 years. So it's definitely, I think at this stage, given the improvement in Europe, given the current pricing on Bidcorp as well, they have become a little bit more acquisitive. They've kind of been holding back on acquisitions to fuel growth, but we've seen some acquisitions coming through as well. And then, obviously just the rand hedge component. I think it's worth having in portfolios.
And you talk about how diversified in terms of geographies Bidcorp is. And, I'm thinking about the recovery that we saw in the UK, which was quite surprising considering, the economic picture in the UK. I'm also thinking about, the troubles that they've been facing in New Zealand as well, because that economy was in a recession. So is this one of those counters that really hinges on an economic recovery to see, I guess, even better growth?
I don't know if it hinges on an economic recovery, because if you don't get an economic recovery, if you're looking as an equity manager, you're also playing a relative game. So you're also looking for something that even if there is an economic downturn, can it continue to deliver earnings? Can it continue to deliver profits? It's wonderful to have a business that does well, extremely well in the good times, but when their earnings collapse totally in the bad times, that's still not kind of the company that I'm looking for when I look at something like Bidcorp. Again, it's even if probably the most difficult environment that you can possibly imagine for a company like Bidcorp would be COVID. Restaurants shut down, people banned from gathering in public. This is a business that's weathered that. It's a very efficient, very well run business, and short of complete economic collapse, it should continue to compound. Of course, we want to see good times returning. I mean, they measure in constant currency anyway, but even if we just kind of move along steadily, because of I suppose the strict discipline the management team has, you would expect this to continue compounding over time.
All right, lastly, you have Boeing. I don't know, I was quite surprised by this one. I mean, it's been going through so much, and recently they had that big strike in the US, which also slowed down production levels. Are you picking this one because it's relatively cheap, considering all the corporate action that's weighed on the share price?
Oh, it's a good question. So I don't usually pick turnaround stories. I prefer to see some momentum within the businesses, but it's I suppose it's how you define momentum. So
Yeah.
it isn't expensive historically speaking. So if you look at especially if you look at the sales figures, I mean, it trades on a price to sales just below 2, which if you compare it to other Nasdaq listed, or at least New York Stock Exchange listed companies, is pretty cheap. And I suppose the momentum that I'm talking about behind it is the long history that it has in commercial planes. Now, you've mentioned the bad news, and often one of the best times to buy a security is when there is all this bad news around it. I mean, we're talking about two 737 Max crashes, then the issues around manufacturing defects. It was actually through it ended up in a 20 months they had to cease deliveries entirely, and this was actually from Aerospirit. It's one of their fuselage suppliers. And then obviously the machinist strike, as you said, they've left people on the space station. This really has been a disaster for the company. But you're starting to get the sense that there's a new management team in charge now. People have to remember that this is still a duopoly with Airbus. It's very, very difficult to see how what Boeing does can be replicated, in the short term. And really, it's very difficult to see how Airbus and Boeing are not going to earn economic profits out for the next 25 years. If you consider like commercial plane manufacture, which now only makes up about call it 34% of their revenue numbers last year. They over the last 25 years, Boeing and Airbus has accounted for 99% of deliveries globally.
Yeah.
Typically Boeing, they do the narrow body, which is the short haul, and then they do the wide body, which is the large long haul transatlantic flights. And typically short haul is a little bit more profitable for them, so that's one of the reasons that they've been under pressure, because that 737 Max is a narrow body plane. But that's not really, I suppose, the excitement that we're starting to see around the company. The first is that, I think one of the big suspicions around the company has been that the Trump administration wouldn't allocate resources towards air defense spending, and if they would, it wouldn't go to Boeing. What we've seen recently is the F-47 through the NGAD program, which stands for Next Generation Air Defense, Air Dominance. They have actually won that award. So that's going to account for about $20 billion in research funding from the US government over the next 5 years, or it's about 4 years. And if you consider Boeing only has a revenue line of about 66, last year was $66.5 billion. So this is a significant investment that the US company is going to make in Boeing products. And if you look at the F-47, which will be the next generation plane, this is literally, it's a manned or unmanned aircraft that literally has drones flying around it to support it. It's an absolutely incredible feat of engineering. So you've got almost the proof that military spending will move towards Boeing, certainly from the US. At the same time, you've seen military spending, and remember, military spending at the moment, so defense, space, and security accounts for about another third, so 36% of its revenue. We're also seeing things like the Norwegian Sovereign Wealth Fund actually expanding and changing their rules so that they are allowed to invest in defense contractors again. So there's a potential that as Europe increases its spending on defense, that Boeing will be a direct beneficiary of this through its defense business, which accounts for about a third. Now that is very, very exciting news for the company.
All right, Gary, thanks so much for your time and taking us through your analysis on Mr. Price, Boeing, as well as Bidcorp. That was Gary Booysen from Rand Swiss.